you need to either devalue and come to what the current rate is, so the exporters are given what they deserve, and then we go back to what our markets were before, and automatically have the ability. And there's also been a state of panic, isn't it? Because a report I read that a month ago they had 8 billion shillings equivalent of dollars being held in banks, in customer accounts.
I think there's enough dollars in the market. There's enough dollars with central bank. So reserves are not a problem.
But there's a panic. But if you ask the bank, they say, we can't give you more than 20,000. We can't give you more than 30,000. A person like you, an industry that possibly needs $1 million a week, how do you cope with this situation? And how do you address this? Because it's extremely important and crucial. It has to be addressed.
I think it's now post-election. And I think that's where the clamor was, that it could be because of that. But now it should be opening up. And I think either it moves right or left, which means either it goes up or it comes down, and then you have liquidity. The biggest problem is liquidity and opening up that market, because if you need the dollars, you're not getting it. What's also happened on our bond, infrastructure bond, the yields have gone up very, very high because the prices went down. Again, political uncertainty. Yeah. So I think this is where we need to bring that stability back to those markets, immediately address that. I think interest rates is another issue that will be addressed or will have to be addressed by the banks, by central bank, and to look at if the interest rates globally have gone up, are we going to increase our interest rates? And that's where, again, it goes back to a government philosophy. So I think immediately next week, when the handing over goes on and whatever happens, we really need to get our hang on what do we do about the exchange rate.
What will happen if the interest rates are raised, the repercussions?